Hey guys, what's up? It's Chad. So it's time to go over the markets for today. Today was Brexit Day, which makes everything super interesting. It's like, what the F just happened in Britain? They actually voted to leave the EU. It's a pretty historic and pretty amazing day. So of course there's a ton of action on Wall Street. So let's check it out here. So first thing I'd like to do actually is I want to check out the EFA. So the EFA is the tracking stock for uh, basically Europe. And actually, let me see if I can do this here. I'm just going to take off this volume here so we can see it. Here we go. So this is the tracking stock for Europe, and you can see right here, nuts. So closed yesterday around 58.50. Closed today at 53.63, so down almost 10%. Pretty amazing day for European stock markets. Crazy, really. Pretty ridiculous. Now let's take a look at how that affected our markets. So the first thing I want to look at is the dollar, because the dollar, is affected probably more than anything else from this British exit, because the big thing with the British exit is the pound dropped, which means the dollar spiked. So the problem with the dollar spiking, oops, there we go. So it's really big here. The problem with the dollar spiking is that when the dollar spikes, you can see we closed today at almost 96 on the dollar. This is a spot future, the US dollar index futures. So yesterday closed down here when everybody thought Britain was going to stay in the EU, 93.40 or so. So closed up 2 full percent, which is huge. So the problem is the dollar going up causes American goods to be much more expensive. So as a result, U.S. earnings go down, and it makes it more difficult for companies here in the U.S. to make money. Now, let's take a look at interest rates. So interest rates, another big effect of the Brexit. So here we have this is a TLT. So this is, people follow the 10-year a lot. People follow the 20-year. This is the 20-year ETF. If we zoom in, it's close to its highs already. The highs were made right back here, back in February of last year, 2015, up at 138.5. So we're pretty close to that on the TLT. We hit 137.5 on the 16th, and we dropped a little bit because everybody thought Brexit would not go through. So if I zoom in here, you can see that yesterday we closed at 132, and today we're closing at 135.78. So a big jump in interest in the TLT. So yield drops, the price of bonds increase. Now let's take a look at gold, which is also a big mover here today. So the high of gold back in 2014 was 129 on the GLD. Today we're at 126. So we went from 120 to 126 today. Big jump there as well. Even oil. Oil having a big effect on oil as well. So this is USO. This is the United States Oil Fund. Dropped from almost $12 to $11.40, which is, 5-6% right there as well. Now, what do we do going forward? That's the big question. So I'm going to bring up the S&P 500 here. This is SPX. This is the S&P 500 index. You can see our high of 2134 back on May 20th of 2015, and we've been in this big range since then with decreasing highs and decreasing lows. And we were talking about our recent high on June 8th at the 2120 level. If we could break that, that's what we were looking at yesterday, because if Brexit wasn't going to go through, there was going to be money coming off the sidelines and coming back into the markets. So yesterday we closed at 2113, which is pretty darn close to those highs, to the recent highs back on June 8th. However, market opens much lower today due to the Brexit, and we ended up closing at 2037. It's incredible. So we're down 3.6% today. And the question is, where do we go from here? So we've got some support right here at 2025. So we're just above that. And we've got the resistance like what we were talking about in the 2100 to 2120 level. So we're still within that range. And the question is, if we get a little bounce off today, it's not clear that we will. We very well may break the 2025 resistance on Monday. It's very possible. You can see this. I'm going to zoom in here. The candlestick that we've made, I'm going to make it into candles here so you can see. So the candlestick that we made, the body is very long, and we closed very near the bottom. So a very short wick. So that's a lot of momentum. And if we change this over to the SPY, we can see that there's a really big spike of volume right here. Today's volume was huge. It looks like we traded 320 million shares of SPY, and average is down closer to 168, so about double our average. Pretty amazing volume as well. So and we were talking about the differences between ETFs and the indexes a couple videos ago. So if you can look here at right here, you can see the candle for SPY is much different from the candle for SPX. So the candle for SPX had that long body. The body for SPY is very small, and it's all towards the bottom. So it's more like a negative doji. So this is also very telling as well. In both cases, the close was near the bottom of the session, so not a good outlook. These candles, you can kind of picture them. You can picture what's going on, where it went up and then it went down and closed back now down by the bottom again, and that's bearish action in the market. So even for the day, it's a very bearish outlook. Okay. Well, I think you're all caught up after the whole Brexit ordeal. We'll see what happens on Monday morning. Looks like the futures are already moving down below the close, so we may have a down open on Monday, but a lot of hours of after hours trading still yet to be done. So we'll see. In any case, have a great weekend. Try not to worry about this stuff too much and have some fun. All right. Have a good one. Bye-bye.